Hello everyone. The topic is dividend decision. We will learn meaning of dividend, definition of dividend, types of dividend, meaning of dividend decision, meaning of dividend policy, factors determining dividend policy, and types of dividend policy in this presentation. Come, we'll see what dividend means. Generally, a company starts and the company borrows money from the investors, which we term as shareholders, debenture holders, and preference shareholders. With all this money, the company forms the capital and it starts working on its business. And at the end of the financial year, the company earns a huge amount of profit if the business is doing really well. And in such case, the company has earned large amount of funds as profit, and this profit has to be distributed to those people whoever has invested in the company's capital, and that distribution of profits to the shareholders is termed as dividend. Dividend by itself means dividing at the end, dividing the profit that has been earned by the company at the end of the financial year, dividing that money among the shareholders is termed as dividend. And the definition of the dividend goes this way according to the Chartered Accountants of India. It is the distribution to shareholders out of profits or reserves available for this purpose. So the types of dividend: if the company has earned a lot of profits and all the profits are in the form of cash, it implies that the company is already having huge amount of liquid cash available. In such case, the company can distribute its profits in the form of cash, and that distribution of dividend in the form of cash, we term it as cash dividend, which is good for individuals and companies. If the company needs cash or liquid cash, or if the company is not having liquid cash enough and it wants to enhance its capital by using the available cash, in such case the company will distribute its dividend in the form of stock dividend, wherein the shareholders will be given stock or shares to the amount equivalent to the dividend amount that had to be paid to the shareholders. This is good for the company because company can retain the cash and it can enhance the capital of the company. Only in such case it is good. The third example, the company is not having cash, the company doesn't want to raise enough finance for furthermore. In such case, the company might get cash in the future. In such case, the company will give a bond, or it is also called as a script, which is in writing, which will specify the amount that has to be paid and the date on which it will be paid. It will be written, and that type of or that form of dividend we call it as bond dividend. And the fourth type is called as property dividend. In this case, the company distributes its dividend in the form of property or assets that are available in the company and which is not so useful for the company, that can be given to the shareholders to the amount equivalent to the dividend in the form of property. And these are the four types of dividend or forms of dividend available so far. Now we'll see the meaning of dividend decision. This is the fourth decision in the financial management, and it says how much money has to be segregated for dividend and for retained earnings out of the profits. It determines the amount of profit to be distributed among the shareholders and amount of profit to be treated as retained earnings for the purpose of financing its long-term growth of the company. How much has to be the decision? The company has earned profit, and in that profit, how much should go for the equity shareholders and how much should go for the retained earnings of the company. This amount has to be decided, and deciding this amount is called as dividend decision, which is a major decision in the company's growth perspective. This dividend decision is based on one thing, and it is purely based on the company's dividend policy. Let's see what is the meaning of dividend policy. Dividend policy dictates the amount of dividends paid out by the company to its shareholders and the frequency with which the dividends are paid. How much amount has to be paid as dividend and at what frequency? Frequency means how many times. How? Is it regularly paid or irregular? Is it high or low? Is it constant or stable? It depends on the policy of the company. The dividend policy of the company is directly based on certain factors, and these are the factors which influence the dividend policy of a company to a larger extent, and they are as follows. First, profitable position of the firm. What is the position of the firm in terms of profits? Whether it is earning high profits, moderate profits, or low profits. And this profitable position is directly going to impact the dividend policy of the company. If the company is earning high profits, the dividend policy will be high dividend policy, and if the company is earning low profits, then the dividend policy of the company will be low as well. The second factor is uncertainty of future income. If the company is not guaranteed that, or it is not sure of itself that next year it might not earn profits, in such case the company might have to retain a larger portion of its profits of this year to be distributed as dividend the next year. So how uncertain it is to earn profit and how certain it is to earn profit is also going to impact the dividend policy of the company. Then what are the legal constraints through the Companies Act and through the Income Tax Act and through other various acts, how the company is going to be affected and in determining or declaring the dividend policy. And next we have liquidity portion of the company, how much cash is available or how much assets that can be converted into cash is available with the company, plays a major role in deciding the dividend policy of the company. And what are the sources of finance available for the company? If the company has various sources of finance to enhance its capital for expansion or diversification, in such case it might not depend on the profits earned by the company for retained earnings. Instead, it can distribute its all profits as dividend, and that will have a huge impact on the dividend policy. Then we have growth rate of return, what rate the company is growing, whether it is at high growth rate, moderate growth rate, or slow rate. This also has an influential role in the formation of the dividend policy of the company. If the company has high growth rate, the dividend will be high, and if the company is not growing as much intended, then the dividend has to be curbed. Then we have tax policy. What is the tax regimes and tax incentives that are being given by the government towards the company? If there are tax incentives for the company, in such case the company will have more profits and that can be paid as dividend to the shareholders. If it is not available, then most of the money might be going for tax, then the individual investors might be getting lesser amount of dividend, which will have an impact on the dividend policy. Then we have the factor which is capital market conditions. In this case, what is the situation or level of the understanding of the individuals in the market, and what is the position of the capital market, how the market responds to the company's capital requirements. If there is easily available capital in the market, in such case the company will not depend on the earned profits, but it will depend on the capital market for its capital requirements. All these factors determine the dividend policy to some extent. All these factors play a major role in determining the dividend policy of the company. The types of dividend policies are as follows. First, we have regular dividend policy. In this case, the company focuses the payment of dividend on regularity. The company wishes to pay the dividend to the investors on a regular basis. It can be whether high or low, but it always chooses to pay on the rate prevailing in the market. But the company's focus here is the payment of dividend on regular basis. Second, we have stable dividend. In this case, whether the company is going to earn high profits or low profits or no profits, in any of these cases the company decides its policy to be paying stable dividend. For this purpose, it chooses three ways. We have constant dividend per share. Imagine a share to be 100 rupee, and for each share of 100 rupees each, it will pay 2 rupee per share. And we have constant payout ratio. Out of the profits earned, some part of that constant payout will be taken from that particular amount that has been earned. Then the company has the third way, stable rupee dividend plus extra dividend. Every year it keeps on paying 2 rupees as dividend, and in case if the profits are increasing, in such case it will pay 2 rupee plus some extra dividend as profit increases. And the third type, we have irregular dividend policy. In this case, the policy itself says that irregular, so the company need not bother about in case if it is not earning reasonable profits to give dividend. In such case, even the investors does not have any right to question the company why there is irregularity in the payment of dividend, because the policy itself says that irregular dividend policy. And fourth, we have no dividend policy, and this type of policy is followed by companies which are not known for profits and which is not running a profitable business, and the companies which are in the verge of closure or winding up. Such companies choose no dividend policy, and it is advisable not to invest in such companies, and those are the companies which are under huge severe loss. And these are the four types of policies that are available in the case of dividends. So from this presentation we learned meaning of dividend, definition of dividend, types of dividend, meaning of dividend decision, meaning of dividend policy, factors determining dividend policy, and types of dividend policy. Hope this presentation gave you a little amount of understanding relating to the topic dividend decision. Thanks for listening. Take care.